here's an example of one of the case studies that'll help show you how you can actually do this. And the property I'd like to talk about today, it was an off-market property. It was 4 bedrooms, 2 baths. It was about 2,200 square feet. The property was introduced to my team about a year before we were able to actually acquire it. The owner was facing some financial difficulties, but after I discussed some of the options for helping them, they decided, just like some distressed sellers do, that they could get this thing corrected on their own. And so they rejected our cash offer to buy their home and help them with their financial situation. And this is one of the examples I'd like to share, especially with beginning real estate investors, about never giving up on an opportunity until you've exhausted all the options. And either the home sells to somebody else, or there's no other way that you can have an opportunity to buy the home. Just because you hear the word no from a seller, sometimes with distressed sellers, no really just means maybe. Nearly a year after our first contact with this owner, they finally requested our help to keep them from losing the house. At this point, they were just weeks away from a default and foreclosure action. So their situation had gone from bad to much worse. With the change in their circumstances, our offer looked much better this time around, and the owner was more flexible related to the price and the terms. What kind of terms? No money down. This is how I structured the deal to ensure our terms fit our needs, and it secured our investment. It's one of the things you want to make sure is that you also have security in any of these investments that we're doing. So I contact my title company. I've developed relationships with a couple investor-friendly title companies, and my title officers have extensive experience as investor transaction closing agents. Now, it can take you a little bit of time and research for you to find one who will understand no money down and that you'll be able to work with. If you're just getting started, don't get frustrated. Just keep looking. Obviously, if you're a seasoned investor, you probably have title agents you've done business with for quite a while. I would go to them first, because many times they'll go, "Oh yeah, I've done transactions like that before. Yeah, our company can do that." Sometimes I've even taken some of these deals to experienced title officers, and because of their security risk portfolio type management, they won't handle them. So you just got to shop until you find the title agents that you can work with and that will understand the process. So title had the owner sign a warranty deed that conveyed their interest in the property to us once we recorded. The seller signed our agreement and it wrapped the existing mortgage. There are 3 clear advantages of using this method of created financing. First off, no money down or no down payment to the lender. So I'm not like I'm going into a bank and they're requiring 20% down, or, even in some situations, you go to private money guys and they want 40% down. The reason is that our contract and its purchase terms in the contract, they actually wrap around and surround the existing lien, so there's no down payment required. Why? Because the current owner already made their down payment, and we're just leveraging what they've already done.